Hi, my name is Edith Campa, and I'm the Financial Inclusion and Education Manager for Ventura County Credit Union. As a certified credit union financial counselor, I'm here to help you on your financial wellness journey. Thank you for joining us today. Let's begin. Welcome to our workshop on credit scores and reports. Let's look at the agenda for this workshop and learn about some of the topics that we'll cover. By the end of this workshop, you will be able to explore the importance of credit scores and reports, learn how to access information about credit scores and reports, discuss strategies to build and improve credit, and identify how to protect credit from incorrect fraud claims. Your credit can be and have a large effect in your financial life. Your credit report provides a snapshot of your financial habits that financial institutions, cell phone companies, credit card companies, and others use to get a sense of your creditworthiness. Understanding how credit scores and reports work can help you keep your finances healthy and help you achieve your financial goals, such as buying a home, leasing a car, or paying off debt. Before we get started, how well do you know your credit score? Take a look at the choices below and answer accordingly. Before we get into why credit scores are important, let's discuss what they actually are. A credit score is a 3-digit rating that tells the lender how likely you are to repay debt. Different lenders use different criteria to calculate it, but in general, the data is grouped into 5 categories, including payment, history amounts, amount owed, length of credit history, new credit, and credit mix. Poor credit is less than 579. People with a score of 579 or below could probably use help to rebuild their credit history. Fair credit is between 580 and 669. In this range, it may be difficult to qualify for loans, and if you do get a loan, it may have a high interest rate. Good credit is between 670 and 739. If your credit is between 660 and 740, you may have blemishes on your credit report, and you might have to be restricted to higher than average interest rate loans. Very good credit is between 740 and 799. A credit score between this range is very good. You will qualify for most loans, and you will probably have a solid credit history with a few missed payments, or your credit history may simply just be shorter. Exceptional credit is above 800. If your credit score is above 800, you have the strongest credit history and qualify for the best loan terms and interest rates. Your credit score can be poor, fair, good, very good, or exceptional. But what if you don't have any credit history at all? Many people, especially young people or people who have recently immigrated to this country, have no credit history. It's not a bad thing. It's not the same as having bad or poor credit. Although people without a credit history may face similar difficulties in getting loans or proving their creditworthiness. However, there are many steps that you can take to start rebuilding credit or building credit in general. Step 1, open an online account. This could be a credit card through a bank or a retail store, or a small loan that you can repay on time in full. Special products, such as a secured credit card and credit rebuilder loans, are designed to help boost your credit. They may have some restrictions on how money you can borrow or may require you to put down cash as collateral. If you've recently immigrated to the United States, you'll need proof of address and some form of government-issued ID, such as a passport or a foreign ID. Step 2, request that your payment history be reported. If you pay your rent and utilities on time, you can request that your landlord or utility company report your positive payment history to the credit bureaus. However, remember that your landlord or utility company is not required to do so, even if you ask. Step 3, this is optional, but you can open a joint account. You may request a family member or a friend with good credit to co-sign on a loan or a credit application. But remember that your actions will also affect their credit. We'll talk a little bit more about this later. Also, make sure your joint accounts are reported to the credit bureaus. Step 4, pay your bills on time, in full, and never miss a payment. If you think you are about to miss a payment, contact the creditor and see if there's options available. But how does your credit score affect your daily life and ability to achieve your financial goals? Let's take a look at a scenario. Let's meet Anna and Bella, who both want to get a home loan. This is a tale of 2 friends. Anna and Bella have been friends since middle school. They're both single and both have steady incomes to pay their bills. Anna and Bella decide to buy homes in their childhood neighborhood and Bella receives a loan without any trouble. Unfortunately, Anna has a difficult time getting a loan. When she finally gets her loan approved, her interest rate and insurance premium are higher than her friends. Now that you know Anna and Bella's story, let's see if we can figure out a few details. Why do you think that this happened to Anna? Well, credit scores are not the only factor that lenders consider. Factors such as the market, down payment amounts, loan terms, and lender loan policies can influence the cost of a loan. Still, experts and research shows that one's credit score has a large effect on the cost of a loan. As you've seen, credit scores can affect your ability to get loans, as well as your interest rates and insurance rates. But they can also affect your eligibility for a rental home, as many homeowners and property managers check credit before renting to unknown people. Your credit score can have an impact on many areas of your life, such as getting a car and setting up utilities and phone services. Essentially, any people or organizations that you're seeking credit from may review your credit report to ensure that they're lending to a responsible borrower. So much depends on a 3-digit score, right? Who actually comes up with this credit score system? Well, I'm glad you asked. There are many agencies that prepare credit scores, and they can use different modules to calculate them. However, the most popular scoring module are FICO and Vantage Score. There are 3 main credit bureaus in the United States, which include Experian, Equifax, and TransUnion. They, along with lenders, use their own version of the FICO or Vantage credit score model. The bureaus keep track of your credit history separately, so it's a good idea to utilize each one. If there's large variations or discrepancies among the reports, you should get in touch with the bureaus to figure out why. Credit scores may also be different depending on financial products that you're applying for. For example, mortgage applications may yield a different score as compared to if you were applying for a credit card. As mentioned earlier, different credit bureaus calculate your credit score in different ways. While the bureaus do not disclose the exact methods or formulas they use to calculate your score, we do know the general factors that are considered. The most important factors that affect your credit score are your payment history and the amount of debt you owe. Let's take a closer look at these factors and others that make up your credit score. Payment history typically accounts for approximately 35% of your credit score. This primarily includes looking at whether or not you pay your bills on time. Do you always pay at least the minimum amount? If you do, then you're in good shape. If you make even one late payment, though, it will likely have a negative impact. That's why it's so important that you always pay your bills on time and pay at least the minimum amount when you do so. Amounts owed typically account for approximately 30% of your credit score. The amount you owe depends on 2 major factors: how much you actually owe on your credit card or loan, and what percentage of your available credit you are using. Typically, people who are using less than 30% of their total available credit would be at a lower risk for a lender than people who are using 90% of their available credit. Simply put, maxing out your credit card can negatively impact your credit score. Length of credit history. The length of credit history typically accounts for about 15% of your score. Credit history is affected by how long you've been managing your credit. The longer the credit history, the more information the lender has about your repayment habits and reliability. People with the short credit history, even if it's steady and good, may be at a disadvantage because lenders may consider them to be high risk. So it's important to build and maintain good credit early. New credit typically accounts for 10% of your score. New credit, or credit that you've recently applied for, accounts for a smaller part of your credit score. Each time you apply for new credit, a lender runs the check on your credit score, and this temporarily decreases your score. It signals that you might be using too much of your available credit. There are limited exceptions. For example, applying for too many mortgages to buy a house in a short period of time does not tend to affect your score negatively. Finally, the types of credit typically account for approximately 10% of your score. People with mixed credit types, like credit cards, auto loans, and mortgage, may have slightly higher score than those with only one type. Credit scores are extremely complex, and your actions and everyday decisions can influence your finances. How about someone else's actions? Can they affect your credit score? Many people think that co-signing on a loan is helpful, especially if the person is a child, a significant other, a parent, or a close friend. Similarly, many married couples or people in long-term relationships decide to merge their finances. It's important to know how this decision may affect your own credit score. Let's look at a few scenarios to see how co-signing, merging finances, and sharing lines of credit can affect your score. Anna just bought a new house, but it's farther away from work than her old apartment. She needs a new way to get to work. She would like to purchase a new car. She has taken some steps to improve her credit and is now eligible for a car loan. Anna wants to use the loan to get a new car, but she has a problem. She needs someone to co-sign. Should her best friend Bella co-sign on a loan with Anna? Why? Or why not? While co-signing on a loan may not necessarily impact Bella's credit score, the loan will appear on her credit report. There's no right or wrong answer, but Bella's credit will be impacted negatively if Anna doesn't pay her loan on time. When you co-sign on a loan, you're promising to repay a loan if the other person does not do so. If Anna pays off her loan on time, it could actually help improve both Anna and Bella's credit scores. If she does not repay her loan or she misses payments, it will affect both of them on their credit scores, and it'll impact negatively. Applying for credit on your own or with someone else can affect your credit score. Be mindful of your own credit score before making decisions to co-sign a loan or merge accounts with someone else. Adding an authorized user to a credit card is also a common way to share credit. But keep in mind that the primary cardholder is responsible for repaying those bills. If you both use the card responsibly, it can increase both of your credit scores. However, adding an authorized user can be a risk for the primary cardholder if the authorized user overspends. We've talked a lot about credit scores, but what about credit reports? Are they any different? Your credit report is a snapshot of your credit profile, including your history. Every time you take out a personal loan or apply for a credit card, those actions will appear on your credit report. It's important to review your credit report regularly. It's one of the tools to build and maintain good credit. The 3 nationwide credit report bureaus calculate your score based on the factors that affect it. Many people wrongly assume that checking their credit score report will affect their credit score negatively, and that's not true. In fact, keeping an eye on your credit report can help you in many ways. It can help you detect fraud and maintain or work towards a better credit score. You can get 1 free credit report from each of the 3 credit bureaus per year online or by phone. To get your free annual credit reports, you can visit annualcreditreport.com, which is the only website that is federally authorized to give you your report for free. The Federal Trade Commission maintains it. You can also request your credit report for free via telephone at 1-877-322-8228. Because you can only request your Equifax, Experian, and TransUnion credit reports for free once a year, think about spacing out your requests to maintain an eye on your credit report every 4 months. You're entitled to 1 extra free credit report under the certain circumstances to verify information such as fraud. If you review your credit report and notice inaccuracies as a result of fraud, this is how you will retrieve the information. You can use it by or when there's a denial of credit. So if you've ever been denied for a loan, credit insurance, or employment, and if the denial was based on your credit report. You're also entitled to 1 extra free credit report under the circumstance of unemployment. If you're unemployed but plan to look for a job within 60 days, or if you are on welfare. Credit scores, unlike your credit history, are not currently included in the free credit report available. You can go and get your credit score by requesting it from various companies, including the different credit bureaus. These credit scores are used to be available only if someone, such as a potential lender, paid for them. Now, scores may be available for free from a number of different credit monitoring websites. Using these services allow you to check your credit score whenever you want while monitoring your progress in between your annual check of all your reports. We'd all like to make more money, but even if you find a new job, it may take longer to change your income, especially if you need more training or need to go back to school. So what we do have are some controls over how we manage our money. Once you've requested and received your free credit report, how do you make sense of it? Your credit report will contain 4 major sections. Review each section thoroughly for accuracy. Make note of any inaccuracies or unknown or suspicious details. We'll get into disputing and correcting those errors shortly. There are 4 sections in a credit report. Personal information, and this section contains your name, birth date, social security number, and address, as well as the name of your spouse and your employer. Public records. This section contains information about bankruptcies, judgments, and any delinquent or unpaid taxes. Credit account. This section contains information about your debts and whether you have been paying your bills and loans back on time, or you have been missing payments and are at risk for delinquency. It can also include information about both open and closed accounts. And finally, credit inquiries. The section includes information about organizations, people, or agencies that may have requested to verify your credit in the past 2 years. There is some information that will not be included, such as medical information, information about religion, race, or sex, information about your checking or savings accounts, information about any debit or prepaid cards, or any private loans you've received from benefactors, friends, or family. If you're interested in seeing a sample credit report, you can view one online by doing a quick search on the internet. Experian, TransUnion, and Equifax also offer sample credit reports on their websites. Requesting and reviewing the information on your credit report is the first step towards maintaining and building healthy credit. What are some important things to look for? Let's find out. It's important to review your credit report regularly to make sure that the information is accurate and up to date. Your credit report contains information about your credit history and how well you manage debt. It can also be affected by public records such as bankruptcies, unpaid debts, or bills, or how much of your available credit you're using. Most of these types of information can remain on your credit report for up to 7 years. Bankruptcies can remain on your credit report for up to 10 years, and certain tax liens can remain on your credit report indefinitely if not paid off. Look at the following dates carefully. You want to see the date your account was opened. Remember, the length of your credit history account for a good part of your credit score. Make sure that opening or closing dates of accounts are listed correctly. Date of delinquency. Review delinquent loans and check that the dates are accurate and less than 7 years old. Dates of public records. Any public record of legal activity should be erased from your credit score after 7 years, 10 years if it's a bankruptcy. And finally, dates of credit request. Whenever anyone, a lender or financial institution, employer, homeowner requests your credit report, your credit score may be affected. Check the dates to make sure they correspond with your events. Reviewing your credit reports thoroughly is a good practice. If you've come across information that's incorrect or fraudulent, you can take action. There are some steps that you can take if you need to dispute items on your credit report, and we'll review these steps here. First, you can write a letter to the credit reporting agency. Tell the credit reporting agency what items you think are inaccurate. When writing your letter, make copies of all the documents that support your position. The letter should include your name, address, copies of all items in question, and a copy of your credit report with the items in question circled. Number 2, send your letter by certified mail and request a return receipt. By law, credit reporting agencies must investigate the items in question unless they consider your dispute frivolous. Sending the letter by certified mail with a return receipt ensures that they'll receive your letter. Wait for your results in writing. When the investigation is complete, the credit reporting agency must give you the results in writing along with a free copy of your credit report in dispute results in a change. And finally, send a letter to the information provider. The information provider is a person, company, or organization that provides information about your credit reporting agency. Make sure you let them know that you disputed an item in your report as well. Include the same information, your credit report, a list of disputed items, a clear statement of your reasons, and include copies, not originals, of any documents that support your request for correction. Mail this request, again, via certified mail, and request a return receipt to ensure that it's been received. Fixing incorrect information is an important reason for reviewing and checking your credit report regularly. But what happens if you've experienced an unexpected life event, such as loss of a job, expensive medical issues, divorce, or what if you find yourself in debt? If you've been through an unexpected life event, there's many steps that you can take to reestablish your credit. They are very similar to how you establish credit. Step 1, monitor your credit report and score. Step 2, pay your bills on time and regularly. Nothing builds credit faster than regular and consistent payments. Step 3, get credit counseling. Not-for-profit agencies advise people about money and debt management, help create financial plans, and offer workshops. Step 4, consider financial products. As discussed, getting a secured loan or a credit card can build your credit. However, there may be trade-offs such as fees, minimum deposit amounts that you should understand and ask the financial institution before applying. The Credit Repair Organization Act helps protect your rights, including preventing credit repair organizations from engaging in deceptive practices such as false advertising that can cause you harm. In other words, credit repair organizations may not overpromise, for example, to delete all bad credit, regardless of whether it's legitimate debt that you've incurred. Also, credit repair services cannot demand advance payment, must put contracts in writing, and must offer consumers contract cancellation rights. In the next section, we will identify potential scams from credit repair companies. So next, we will learn how to identify potential scams from credit repair companies. Let's return to Anna. She's trying to rebuild her credit, but is having trouble keeping up with her credit card payments. She researched several credit repair companies. Let's see if we can help her organize and recognize the good from the bad. Anna is trying to rebuild her credit, but is having trouble keeping up with her credit card payments. Anna researches several credit repair companies. The first company promises to remove bad credit information from Anna's report. All she has to do is pay an upfront fee. Anna's worried about her bad debts, but the company assures her that it can scrub away all negative information from her report. The company also advises Anna not to contact the credit bureaus directly, since doing so will negatively affect the company's efforts. There's many red flags in this particular passage. The company that Anna found in her research promised to remove bad credit information from her credit report and required her to pay fees to remove the bad credit notes from her report. Should she do it? Why should Anna accept the company's offer? Or why should she reject it? Well, Anna should not trust the company's promise to remove her bad credit notes from her credit report for an upfront fee. According to the Federal Credit Repair Organization Act, credit repair companies must successfully remove the credit inaccuracies from an individual's report and provide proof that the report has been changed before they can request payment for services. And this can take up to 6 months. That's a red flag. Anna should also be suspicious of any company that promises or guarantees to remove all bad credit information. That is also a red flag. Anna should not pay any fees up front or before the services have been delivered. Anna should not trust any company that promises to remove negative credit information that is legitimate. Credit repair companies can only remove negative credit information if it is incorrect or result of fraud. If a company requires you to claim that accurate negative information on your credit report is false, then that's a red flag as well. Anna should not trust any company that recommends or advises against contacting the credit bureaus. That is a big flag. To recap, there's many red flags that you can spot in a credit repair scam. They can include the following, such as requiring upfront fees for a credit repair service and promising to remove all negative credit information from a credit report, as well as offering to scrub or alter legitimate credit information and instructing you not to contact the bureaus directly. You are entitled to dispute any errors for free, and it's your legal right to do so. Asking for a signature on blank paperwork is also a red flag. If an agency asks you to sign a blank paperwork so it can act on your behalf, it is most likely a scam. Never sign paperwork, especially legal paperwork, without reading it thoroughly, ideally with the help of a lawyer. Credit profile number scams. These are promises of a new credit identity by issuing a credit profile number or a credit privacy number that is similar to a social security number. This is a scam. And finally, fake social security number scams. Any agency that encourages you to use a fake social security number or apply for an EIN number for tax purposes is a scam. EINs are typically used by businesses and not individuals. Credit repair companies can help you spot and remove incorrect or fraudulent information on your credit reports. Credit counseling agencies can also help you improve your credit. If your credit report is poor, you may consider taking advantage of credit score counseling services or credit counseling services. Many agencies offer a free initial session. These agencies may help you create a financial plan to decrease your debt. If you choose to use a credit counseling agency, look for agencies accredited with either the National Foundation for Credit Counseling or the Financial Coaching Association of America. Look for services such as better money management techniques, debt reduction strategies, and a financial plan development. Also, get information about the services and fees if possible before paying anything or providing any type of personal information. We covered a lot of things that could potentially affect your credit. The good news is that a few good habits and strategies around managing your credit and debt can go a long way towards helping keep your credit score high. Here are some basic strategies. Use your available credit wisely. Use less than 30% of your available credit and do not max out any of your credit cards. Pay your bills on time. Pay off your credit cards and credit bills each month in full, if possible. Doing so shows agencies that you're responsible, and it lowers the total amount of money that you owe. Pay off your loans on time. Not only does defaulting on your debt cost you in fees, but it also quickly damages your score. Do not apply for several credit accounts in a short period of time. Make a financial plan or a debt management plan to reduce your debt. Create and follow a monthly budget and periodically review your credit report for inaccuracies. Being mindful about your spending and monitoring your credit score are good habits to develop when building and maintaining credit. Your credit score is something that can affect your entire financial life, so make sure to take good care of it. A good credit score can help you achieve more of your financial dreams. If you had bad or poor credit, don't be discouraged. Keep track of your credit reports on a regular basis and adopt responsible credit habits so your credit score can be as high as possible. It can be an uphill battle, and it may seem like it's taking a long time, but making small changes now can have a big payoff later. This concludes today's presentation on credit scores and reports. Thank you for joining us.